Hey, good morning, everybody. Welcome to Wednesday, September 16th. I hope that your week is going well. I'm excited that you're with us today. Yesterday, we ended up with some green ink. We always appreciate when we get some green ink, and today seems to be following through. So the question becomes, really and truly, was that 10% correction? Was the correction we saw the last couple of weeks, was that the floor that we're bouncing off of? Nobody really knows, but it's definitely starting to move in that direction. So, hey, stay with us today as Dave and I start to really dissect what's happening in the marketplace today. I'm glad you're with us, and we'll be back with Dave here in just a moment.
Oh, 5.7 Light FM, Bonnie Raitt is there. How do? I'm glad you're here this morning. It's 19 here before 9, 8:41. Let's check in and find out what's happening with money in the world today. Downtown Sebring we go to the offices of Statler Financial Services. Phillip Statler standing by. And Phillip, I used to think the worst job on the face of the earth was the guy that shovels up behind elephants in the circus. I got a sneaking hunch a worse job right now is to be the chairman of the Federal Reserve while our friends in Congress can't seem to find the restroom. It's got to be frustrating being Chairman Powell right now because they got a report they got to put out this afternoon, and somehow they need to reassure us. What do you think the odds are they're going to succeed?
You know, my hope is that they're successful. But, you know, you're right. They have got to be frustrated with Congress not being able to get off their duff and put their political stuff aside and look out for the American people. That's got to be the number one cause and the number one thing that Congress needs to be doing, and they're not. And so the Fed meets today, right? What are they going to tell us? That's going to be key, Dave, as we head into the rest of this quarter.
That's almost a fait accompli. I mean, they can't go much lower on interest rates. I suppose they could go to flat zero, but, I mean, they're basically there now. They're buying corporate bonds like it's going out of style. They own just about every mortgage in the country right now, buying those. How in the heck much more can they do? The Federal Reserve cannot stimulate demand. The only thing they can really do is make it easier for business to survive while Congress fritters it away. And I would not be at all surprised to hear Jay Powell use a few four-letter words in his 2 o'clock press conference today because, doggone it all, there's only so much the central bank can do.
That's right. There's only so much money they can put into the system. And that's really what they're supposed to do, is control the money supply. And so we shall see what happens this afternoon when he does his little dog and pony show after the meeting.
Absolutely. You found a news item the other day that kind of makes you sit up and take notice. The projection is they might be looking at keeping these low interest rates with no changes out until like 2023. That's amazing.
Yeah, I saw that headline somewhere that really caught my eye. I didn't get a chance to read the whole article, but I know the other thing that I have read pretty significantly is, you know, they've changed their stand on inflation to, you know, 2% was the target. And so when that was a target, if inflation hit 2%, they'd start raising interest rates. Well, now they changed that language to average 2%. So remember, it could take us several years to get to an average inflation of 2% from here. And so that could be what keeps interest rates low for that long a period of time.
That could very well, but at the same time, that probably is wise given the herky-jerky numbers we've seen on inflation. I mean, you annualize the consumer inflation rate that we had a few days ago, and it averages out to like 4%, but that was following up a month before that where it averaged down to like 1.5%. I think maybe a smoothed average, given how herky-jerky the economy is, probably makes good economic sense, doesn't it?
Well, I think it does. It can. I think it can promote to a certain degree. I won't call it hyperinflation because it wouldn't be, but it could allow some big increases in inflation before the Fed takes action. Like, let's say they had 0% inflation this year. That means, in theory, they could have 4% next year, which is a pretty substantial number. Mm-hmm. And that would give you a 2% average, right? you go out 3 years, and so you see what I'm saying. It can take a long time, and we could see some big jumps at certain periods of time in inflation, which is not good for you and me. We don't want to see that at the store.
That's true. On a smooth average annually, that could get to be disastrous. And let's face it, according to the World Bank authorities, our Federal Reserve has historically, anyway, not been real good at reacting properly to changes in economic conditions. So your point's taken. There's a point of concern to be made on that as well. I'm just responding to, gas goes up and down, and we see the inflation rate go in wild changes, and other things that we don't watch as carefully as we do petroleum. Just while we're in the process of this recovery, we month to month, quarter to quarter, we see some weird changes that don't necessarily indicate what the economy is doing.
That's true. You're right. And let's just make sure we understand there is truly a disconnect between what the market's doing and what the economy is doing. They are not hand in hand at this point.
Yeah, that's true. The market is, we've always said it's a leading economic indicator, which can give you reason for optimism, but it doesn't necessarily indicate what we're going through at the moment.
And it can also give us a little false sense of hope down the road.
That's also true.
Yeah, so you got to look at both sides of that coin.
That's true, and I'm always the optimist, and you're always the realist, so it becomes a good pairing. Talking about retail sales, the one big government data dump number that we got this morning, again, under normal circumstances, I'd call this a bad bit of news because they expected at least 1%, depending upon the numbers you and I were looking at month over month. And yes, retail sales did grow during the month of August, but by only 0.6%. Under normal circumstances, that'd be a disappointment. But the fact is it was growing, which I guess is good news.
Yeah, that is good news that it's growing, but it's half of what it was the month before. So that's somewhat disappointing. And it is disappointing in terms of what the economists expected it to be, because, they expected it, depending upon who you talk to, 1 to 1.1%. And obviously 0.6 is a lot less than those numbers. So, but you're right. It is growing. At least we are moving forward and not backwards when it comes to retail sales. And as we get closer to holiday season, to me, that's going to be intriguing to see how that number does grow. And it'll be interesting to see how that compares to the prior year in terms of retail growth.
It's going to be interesting. And again, it's one of those times where none of the normal rules of thumb hit. A miss on retail sales would normally be something that would prompt the stock market to go OMG and tank. This time around, it looks like they're actually responding almost positively to it. And my only guess is the fact that the inflation figures that we saw earlier this week, the import figures, the price levels on those, we're seeing a little uptick in inflation right now. The fact that we're continuing to buy more doesn't mean that I guess it just means that the consumer is being pretty resilient at the moment and is continuing on the plan regardless of what happens to prices.
Well, yeah, it just means, hey, people are spending money, and right now, that's a good sign. And you're right, the indexes are liking that what they're seeing in terms of people spending money. So we'll just have to keep looking to see what those numbers look like next month.
And as the Fed says, smooth averages are what count in the final analysis anyway. Hey, a couple of household names reported their quarterly earnings reports, and we had some interesting news, didn't we?
We did. We had some good news kind of across both fronts. The first one was FedEx. FedEx really had a good quarter. They beat by a little over $2 a share. They came in at $4.87 on over $19 billion of revenue, was almost $2 billion more than expected. They saw their volume, their daily volume, this is a big number, jumped 31%.
Right.
Yeah. And so
didn't they have a divorce with Amazon last year? That number would include that would be life without Amazon too, wouldn't it? That was FedEx.
Yep, I think so. And this is their first. It's our, we're looking at kind of second quarter numbers, but this is their first fiscal quarter of the year for them. And so that's a pretty good deal to jump 31%. This this quarter, and they are getting a nice little pop when it comes to their stock price. They're up 8.3% this morning, which if they continue on this track, will open at a new 52-week high right now.
I knew they were at the top of my winner list. I didn't know what the numbers were, but that explains why, doesn't it?
It does, because let's face it, FedEx has struggled this year. They've been as low as $89 a share. So, and now they're looking at $256. So a pretty big jump back.
I noticed UPS is getting some sector bounce of it too. UPS is up by about 4% this morning, and I don't think they reported, did they?
No, they did not. And so I'm sure they appreciate FedEx helping them out there.
Yeah, believe that.
So the other household name is Adobe. You know, Adobe is a PDF guys, and they got their creative suite for photoshopping and that kind of stuff. So they're a big deal. They did come in and beat by about 16 cents a share. Revenue beat by a little bit. They saw a 19% year-over-year growth in their digital media sector of their business, and so that's they had a good quarter also. Not as good as FedEx though. They're up about 1.8% right now. Still, trending towards the high side of their 52-week number, but not quite there yet.
All righty. Setting the table for the morning. Yesterday was an up day on Wall Street. Dow almost looked normal. It was only up by 2.25. Standard & Poor's was up by 18 points for the S&P 500. NASDAQ continued its party. It's recovering because it's still nowhere near its all-time high. It was up 133 points yesterday, though, so it made good progress. 45 minutes before we open, Phillip, what are we looking at this morning?
So right now, Dave, we are looking at a lot of green ink and excited about it. So we got the Dow up about 0.4% right now. The S&P 500 up a little over 0.4%. And I got to tell you, the NASDAQ is making a pretty good recovery because they were only up $8 before the sales number came out. They're up 25 now, which is about 0.25%. So good news on that front. Hey, the commodity side, silver's up just a tad, about a little over 1/10%. Gold's up 0.5%. We got to get excited about crude oil today, and I'm sure it's just because of Sally out in the Gulf of Mexico. But it's up 2%, a little over 2% right now at $39.11 a barrel right now, Dave.
At least it's approaching a decent number, even if we don't like the cause of it. World markets mixed. They were trying to wait for our numbers as well. Both Japan and Hong Kong kind of one side or the other of the zero line at the close this morning. Europe is off by a little bit, but no great trend halfway through their day. Just we're talking about 1/3 to 4/100% off. That's about it. Phillip, stability, help, risk. How do I put them all together and make my retirement work with a little solid advice from you?
I got to tell you, now's the time to get a financial x-ray, get a second set of independent eyes that doesn't have some big company corporate, that you got to report to, that can do what's best for the client. Give us a call at 863-382-0037 to schedule your financial x-ray. Follow us on Facebook under Statler Financial Services. Like our page, follow us there. We rebroadcast this little time with Dave every day. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All righty. We will be watching about 2 to see if Jay Powell uses any 4-letter words, and we'll catch you tomorrow morning. Fair enough?
Fair enough, man. You have a great day, and I'm looking forward to our conversation tomorrow.
Thanks, Phillip. We'll see you then. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, I want to really and truly thank you for joining us today. You don't know how much I appreciate you guys tuning in every morning. Hey, like our page on Facebook. We're trying to grow that so we can reach more people to keep them informed about what's happening in the economy and in the markets. And I think we're a good place to get some of that information. So like our page on Facebook, share us with your friends and family. Hey, if you've not had a checkup on your portfolio, please, it's a great time to do it. Give me a call at 863-382-0037 to schedule your financial x-ray. Until tomorrow, have a great day.